The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 13th Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got your back. Let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And inside the Tigers Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow down 146 points. She's trading out at 25,166. S&P down 12, 28.21 is the print. NASDAQ 100 down just a hair. That's 6 points to the downside. Trading out at 74.02. Russell down 15 points. Semis are slightly green, up 89 cents. Trannies are back about 0.8% or 88 points. So Dow, I said the Dow earlier, the New York Stock Exchange up 92 bucks. We're going to take a look at the New York Stock Exchange. Spot volatility index up 13%. Maybe this is day 2 in a row with a one-day rate of change greater than 10%. Won't know till the end of the day. If you take a look at Goldilocks, she's back 18 bucks. 12.01 is the print. S&E, the silver contract down 30 cents. That's nearly 2%. Light sweet crude off $1.70. Lead the charge here, dollar-wise, to the upside. It is the amazing Amazon, up 16 bucks. You've got the Ligan Pharmaceuticals up 6 bucks. Spotify up 6 to the downside. Dicom, not to be confused with a daikon radish, but Dicom Industries down 21 bucks or 22%. Booking Holdings up 21 bucks. That's 1%. I am just trying to figure out how to pronounce this one. Hailing, yeah, Ed Group. No idea how to properly pronounce that. HLG is the ticker symbol. Why don't you pull it up and tell me how to properly pronounce that name? And why do you create names that people basically, guys like me, can't figure out? But it's trading down 14 bucks. That is 17%. Maybe that is one of the reasons. So what do you want to take a look at? No questions on deck just yet. So let's go take a look at, well, what are the markets doing out here? Hey, they're trading lower. You didn't need me to tell you that. But what does it mean? If we take a look at the ES Mini on Friday, this closed below the bottom of its TAS market profile. This is the synthetic ES Mini chart that Steve uses out here. I especially like that during the contract rollover period where you're gathering days worth of information. And so 28.42 is the level of support that was busted through on Friday. I'll tell you, subscribers and I went short on Friday. And if we take a look at today's action, old support was tested. It is now resistance, the 28.42 level. The NQ is held up well. It is a brand new box that has formed today. 73.59 is the level that it must bust through, close below, even test, but in essence, close below in order for things to really get churning and turning and burning to the downside. We don't have that. What we do have is 2 out of the 4 as we speak at 1:10 in the afternoon. The second one, ES Mini trading below its bottom of the box, comes to the Dow. Now, the Dow, the level to be watching in the futures contract is 25,201. I don't know where it's going to close today, but if it closes below that level, it says it has further to pull back. Inside the Russell 2000, which has had the most damage, I think, percentage-wise today, it's trading with inside its profile. So it is consolidating, so to speak. The top of the box has not been tested. You and I took a look at that at 1705 on the daily as well as the weekly time frame chart. It looks to me like what the Russell 2000 will do is get down to the bottom of its box, maybe lower, but certainly the bottom at 1659. So if we're looking for clarity from the equity futures contract or a unanimous vote, quite frankly, we don't have it. But at the end of the day, you know how I hate saying that, as long as the ES Mini closed below 28.42, as long as the YEM closed below 25.201, two of the four have spoken and suggest at least lower prices, the NQ getting the bottom of its box and the Russell to it. If we take a look at what the spot volatility index is doing on Friday, the rate of change inside the spot VIX index, well, let me just do this. Let me skip that chart. Let's go take a look at this chart out here. It's a little bit easier to take a look at. Blue lines on my chart represent one-day rates of change greater than 10%. What typically happens is you get a stalling or bounce or bottom, which in essence is what we saw take place this morning out there. We got the bounce, went all the way up to the bottom of that TAS daily profile inside the ES Mini, and then it found resistance, and since then has traded lower. Now we may have day two. Right now it's 12.61% rate of change. So this does not mean that things are just simply going to fall off the face of the earth out here. But we are in what appears to be, with these one-day rate of changes, be nothing more than a bounce. Now, how can I say that? Well, I don't know. I just did. And I can say that because there is another market condition that you and I have been talking about. That condition came from the New York Stock Exchange. Inside the New York Stock Exchange, you were good enough to point out to me that we saw price moving higher. That's the green diagonal line. There's a yellow rectangular box. I can't remember why I made that a yellow rectangular box. Maybe it was to say, hey, is this time any different? Well, what we know right now is this time was no different because we had price moving higher and we had the advanced decline oscillator reading making lower highs. Now, the real key to this pattern, and you'll see other rectangular boxes on my screen out here in the price area of the S&P 5 of the New York Stock Exchange. Let me slap myself so I can at least speak properly out here. The real key to price for sellers to be able to get things moving to the downside falls inside the spot volatility index. And what's required there, and this is where we're at today. We were there on Friday. Friday was a close above the 50-day exponential moving average line. That level right now is priced at 1330. It's going to change throughout the day as prices move higher and lower. But what we saw take place on Friday was a confirmation of get ready, buckle up, because prices should move lower in the New York Stock Exchange out there. Now, you and I, we can't trade the New York Stock Exchange, but this is the area to be very careful. Now, I'm only talking short term here, folks. If you're even thinking about touching your retirement funds, do not. Stay long and strong for a long period of time to come. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's move off of the equity markets out there. You know, we've taken a look at the futures contracts. We looked at the signals from the New York Stock Exchange. We took a look at the signal from the spot volatility index. It basically has provided us, just doing that provides us with all the information we need to know about what the intention of the markets is. It's really that easy. That is the cool thing. And like I said before we went to the breakout there is don't be thinking, do not misinterpret what I'm saying or suggesting that you should be making some type of change to your retirement accounts out there. Those are long-term, buy and hold, assuming that you've had it for a while, and just stay with the bullish trade. It is going to pay off, as some people like to say, big time. Big time out there. But let's go take a look at Goldilocks. That's moving to the downside big time as well. So let's try to figure out where it is going. It's off 18 buckaroonies out there. Now, gold is being sold basically by traders around the world. It's not just traders in the United States. How do we know that? Because you and I have the ability to put ourselves in the position, if we're looking at gold priced in the major currencies out here. And by major currencies, you and I are taking a look at the euro, the yen, and the pound sterling out here. That is really what we care about. And if we take a look at in dollars and in yen, that's panels number 1 and 3 out here from your left to the right. What you will see on their screens, traders in that local currency, and that is what it's all about. It is their local currency. They could give a rat's patootie what gold is doing in dollars. Now, they do care because what they want to see is, hey, who's buying, who's selling. At this stage here, whether you're a trader in dollars or you're a trader in yen, both are selling. And guess who has joined in on that party? Well, we saw the biggest breakout potential. You and I took a look at this last week. I wasn't with you on Friday, but we certainly looked at it on Wednesday. And on Thursday, it was traders of gold inside of pound sterling that were trying to make an attempt to move the shiny metal higher. And on Friday, you and I weren't together, but it was traders in euros that were trying to do the same. But the traders in dollars, U.S. dollars, and in yen were saying, hey, maybe they were talking to each other saying, is this a beautiful thing or what? Because we can sell all we want to those folks out there. And those folks, There are traders around the globe that trade this product. It is not just you and I. It isn't. And wherever they're sitting, they're only thinking about that product in their currency. In order for gold or any asset to be moving higher, it must be done in all of those currencies. Otherwise, you have the natural buyers and the natural sellers out there. And when they start moving to the downside in earnest, as they are right now, it is lookout below. You've got to see some type of bottoming signal. So, Steve-O, do we have any kind of bottoming signal? Well, we know that gold, maybe you don't, but yeah, you do, because we took a look at this on Thursday. Because on Thursday, maybe it was Wednesday, but on Thursday, we had a brand new market profile. That was a beautiful thing, because what it did, I'm looking at the daily time frame chart, it gave us new level of support or resistance. And what we saw taking place this morning was a close below the bottom of that box, 1209.90. Now, look, the end of the day is not here. Maybe we see price regain itself and close above the bottom of the box. But if we don't, when we take a look at market profiles, we don't see anything in sight that says that price is done moving lower. So be careful. Be careful. This is about being able to manage your losses. No idea where you might be, but certainly the mining equities are going to get trashed if gold continues lower. So let's go in, and on this set of time frames, the 1 hour, the 240-minute, the daily, and the weekly, we're not seeing anything that is a sign of a bottom. Nothing, nada, zilch, zippo. And we know what traders across the globe are doing and what they are thinking. They can't hide. We know exactly what they are doing. So what is gold doing? If we go take a look at this chart here, maybe it's a little bit easier to see. And that is the following. And this is that gold is trading all the way back right now into the December 2016 level, where maybe it's going to make a 100% move of a move. Maybe it is, and maybe it's going to go ahead and blow through the low out there of 1166.10. I don't know which it is. But what we do know is when we get an inclination that it looks like gold may be bottoming in dollars, we have to take our other two eyes, because, yeah, we've got three eyes out there, and we've got to go take a look at the charts of gold price in those other currencies. We've taken that oath. We will not be faked out. It's not going to happen on my watch. It is just simply not. So the next level where gold is likely headed to is that 1166 area out there. And it can blow through that as well. And by blowing through that, it would come all the way back into the November 2015 level, 1102. Don't think that it can't happen out there. Supposedly, we've got some crises around the globe out here, over in Europe. And if we do, which we do, they're certainly not rushing into gold, are they? So what does that tell you? If gold can't get motoring during a period of uncertainty out there with regard to what's going on over in Turkey and elsewhere around the globe out here, it's got to make you say, something to think about. So at this stage of the game, we've got to believe that gold is headed lower. Can we find anything to suggest otherwise? The only thing that we can find, and that you and I know, is that when gold makes bottoms and serious tops, and all markets do the same thing, it does it with Stevie's Rhodes Momentum Indicator signal. And as we speak right now, 1:24 in the afternoon, it is still intact. And we know that it's intact because we've got price moving lower, doing less relative energy. There is the black diagonal lines on my screen. We also know from the trading session of June 14th is that the market is singing in the key of G. That is number 7, the 7th inning wave. For everybody out there that is a baseball fan, you know what that 7th inning stretch is like. And sometimes when that's, well, not sometimes, always. You may not be singing "Take Me Out to the Ballpark," but at least you get up and you do a little stretching. When you stretch, sometimes you can see some type of turn in direction. So there is the potential out there. But that potential must be proven. And right now, the proof in the pudding wouldn't be just moving higher, wouldn't be closing above the bottom of the box. It now would have to close above the top of the box, and that's at 1235. That would be one, did I say 12? Yeah, I said 1235. That would be a heck of a rally. Is that what I see unfolding out here? I don't see it at 1:25 in the afternoon, and you and I don't see it on those other screens. So if you are in gold, and if you are in those mining equities, of course, I don't know how the mining equities are behaving. We just know about the directional correlation. If we go take a look at the GDX as an example out here, well, what we do know is this thing is broken through this huge consolidation. That's no good. That's no good out there, like they say in my big fat Greek wedding. And so this says the GDX likely targeting the lows from December 2016, 1868, 1858 is the area. But if gold continues to move lower, there's no reason why the GDX can't go ahead and make a measured move of that consolidation. I know you're saying, well, where would that take us to? Well, the estimate out here is I draw my rectangles because that's all we have to do. A measured move, it's equal to or greater than a consolidation says around 1610. Yeah, 1610 could be the number for the GDX. So be careful. Be careful out there in the metals complex. We've got the Dow down 96, S&P up 7. NASDAQ 100 up 7 points. Good old Apple 209.38.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you in the market for selling or buying real estate in the Tampa Bay, St. Petersburg, or Clearwater area? Tiger Real Estate LLC is a firm that has extensive experience in this area, whether you're looking for an idea of what your property is worth or how much per square foot you should be paying in these markets. We use our knowledge to get our clients a realistic price, whether buying or selling. We're aggressive, hardworking, and dedicated. Our reach and education include getting you information in the mortgage market as well as title insurance to ensure a smooth closing. Before you make one of the biggest decisions in your financial future, call Tiger Real Estate LLC at 727-329-8322.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 75. S&P is down 5. So no questions in the lineup as we speak. So let's just go surf around and take a look at what's going on inside the markets, individual equity-wise. Again, you can always reach out to us, 727. No, I just heard that. 877-927-6648. See, here's one thing, you're thinking something else, and it was like today. I was thinking one thing, and I wrote down the exact opposite, and then I didn't catch it. My apology for snoozing at the switch out there. Didn't cause a problem, though. But if we take a look at what's moving to the downside here, let's see, Dycom Industries, DY is the ticker symbol. Now, that is a gap to the downside. Let's go put that on our 3 time frame chart out here, DY, get a feel for where this thing is trading back into. So how are we going to do that? So it's below all market profiles out here, so bearish on, in essence, on all time frames. Let's go to the longer term time frame first. And this is trading. Looks like what this wants to do is trade back to the February 2016 level. Now, there are 23 million shares there, the top of which is 67.59. The actual low so far today is 67.75, so we haven't tested it. Already today, about 8.8 million shares out there. So it sounds like, it looks like it's coming back into that area a bit hot. And therefore, price is likely to go test that range. Now, the range on a monthly basis is 47.10 to 67.59. Any close below 67.59 opens up the lower swing point test out there. That is what Dycom Industries is doing. On a daily time frame chart, just to take a quick peek out here, see what this is doing. No third gap play. So today's move could not be classified as an exhaustion move, at least not as I see it. And do I see anything else? You know, it's trading down below where the breakout began, where the move to the upside, in essence, began. The move to the upside actually was in February 2016, so we're to establish that it's likely the price is headed back into that range out there. Where this thing broke out with any significance was on the trading day of 5/25/2016 out here, and now that level of support appears to be resistance. That is Dycom Industries. DY is the ticker symbol. Also moving to the downside, let's take a look at stamps.com, down 14 bucks. Interesting chart out here. We take a look at just a couple of trading sessions ago. This thing had gapped to the downside. This is on the trading day of, well, let's come over to our 3 time frames as well for stamps.com. The ticker symbol STMP, so STMP. But what you're going to see on the daily time frame chart out here, I'm trying to understand where this thing might be headed to. Okay. If we take a look at an interesting trading session, here on the trading day 2 days ago on August the 9th, this thing gaps down big time to the downside, gaps down to 220.51. Now, this had closed the session before at 255. Now, this equity, stamps.com, opens at 220.90 and proceeds to trade higher throughout the day. Now, the candle itself, you'd say nice big green candle. It's not a bullish reversal signal, but if anything, all price did on Friday was get up to test that gap out there. And so it looks like what stamps.com is doing is it's going to trade lower. I'm glad. I know you needed me for that, right? Looks like it should go back and at least test the lows from Thursday, August the 9th out here at 220. What was it? The exact number, I'll give it to you. 220.51. But the thing is this. For this month in stamps.com, you've got a key reversal month going on. And this certainly is a stretched pattern. And clearly I can see an A to B equals CD out here. So can you. I don't have it typed into my system. And so stamps.com may actually be pulling back into the 166 area, which will be the top of its monthly box. It's not going to do it overnight, but it does look like what stamps.com wants to do, and that's the last time that I will say stamps.com, is to trade lower and maybe all the way down to the 166 level out here. Let's go take a look at some things that are moving to the upside. Well, Amazon's moving to the upside. Apple too. Let's take a look at Apple. Trade out at 209.63. What does Apple want to do? This is a daily time frame chart. Although I don't have the volume out here, well, I'll turn them on. I don't have it. Let's go turn it on out here. And the way to do that, if we take a look at it, is let's turn on the market profiles. Let's also turn on volume. Makes a whole lot of sense to do that. And what Apple has is a confirmed A to B equals CD to the upside. So before it runs lower, if it even does run lower, it wants to run higher. And the level is 214.30, where it completes the one-to-one A to B equals CD. Now, what it's struggled to do for the last 4 or 5 days is close above the top of its box out there. So right now it's just consolidating, an upper level consolidation. And the level to be watching is 209.50. If Apple can close above 209.50, doesn't have to be today, but if it does, and they're trading at 209.54, 4 pennies. Oh, I hate that, because if you just close above it by 4 pennies, technically it is a break of resistance. But 4 pennies, it doesn't give you the warm willies. Yeah, it gives you the willies, not the warm, comfy feeling. But either way, it closed above the top of that box out there. The 1-to-1 A to B equals CD. It's already written in stone. It's just trying to be communicated to everybody out there. Is the 1-to-1 A to B equals CD, 214.30. Price doesn't have to stop there inside of Apple. In fact, someone ought to say to themselves, if there are concerns around the globe, there's no concerns here in the U.S. None, nada, zilch, zippo. Okay? What we're seeing going on inside the markets is nothing more than an orderly retracement of markets that don't just go in one direction out there. So that's all that we're seeing. That's all that we're seeing at this stage of the game at 1:36 in the afternoon. But why aren't people rushing into gold across the globe in their local currencies? You know why? They see great value over here in the U.S., and Apple is one of those great value stocks. What would you rather own right now? Would you rather own gold, or would you rather own Apple? Something to think about. Let's go take a look at the amazing one, Amazon.com. That too moving higher today. Let's go see what that is running into, if anything. And it's not running into basically anything that you and I can see out here. It's above daily, it's above weekly profiles, and this thing continues to want to motor higher to where you say. I don't know if we can even figure that out. We certainly can't figure it out by taking a look at this chart to come up with an A to B equals CD pattern, or even an expansion of swing points. We just can't. It's trading out at 1907. That was a monthly chart, by the way, that we were taking a look at. So I don't have any really good way to give you a price projection out here, and I'm not willing to just pull something out of thin air. But what we can say about Amazon is there is no signal on its charts just yet that tells us that some type of top is in for it. So we've taken a look at 2 stocks moving to the downside, 2 to the upside. We've got 30 seconds to kill as we speak right now. Hey, how about that Facebook? Let's go take a look at Facebook. Has that thing found any kind of stability out here? FB, of course, is the food and beverage ticker symbol. And, well, you know, it had that nice bounce. So far, that's all it was. Bounce right into the top of the daily profile out here. There's a perfect example of why these profiles are assisting you and I in understanding what the markets are doing. You know, after that big, huge drop inside Facebook, there was a brand new profile that formed on August the 2nd. What we saw price do, and it was bullish in structure, we saw buyers push the price all the way up to the top of the box. That was on August 7th. That was at 187.38. Resistance is there inside Facebook. The question is, will it find support at 176.97 or is it 171.77? Just trading in a range as we speak right now.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So a couple of questions. One, if we could go take a look at coffee futures out here. And so what I have up on my screen, the request was to go take a look at the September and I believe the December contract for coffee. I've got the synthetic contract up on my screen. We can see if it gives us different profiles by switching over to September. But I'm just going to start here. And similar to the case that we were making with gold, is that there was a brand new profile, daily profile, that formed inside of coffee futures a few days ago. Let me expand this chart out. You'll see it. It actually took place on August the 7th. And we can see how that level, the bottom of that box, which is 106.74, was tested and rejected up until today. Now, perhaps, and again, the session is not over, but what you would like to see, because I believe you've taken a bullish position here, is you would love to see coffee futures close back above support. Daily level, 106.74. If it doesn't, then you've got potential problems out here, especially if 106.74 continues to act as resistance. So that's what we see just in taking a look at this chart. There was a brand new weekly profile that formed as well. Again, we're using Stevie's synthetic version of the contract, which provides us with, when it comes to the futures contracts, it really provides us with good data, or at least I believe that it provides us with excellent data. And there was a brand new profile that formed 3 weeks ago. And 108.84, you're not going to see a center of the box here. What does that mean? It means at this stage, the center of the box, the center line, and the bottom of the box are one and the same. Now, that's what I like to call super strong. Did I say super strong? I think I meant super strong bullish support. However, 3 weeks ago, that super strong bullish support, that Superman type of support out there, it turned out to be not the case. And now it's resistance because there was a close below that level. So the weekly chart, as far as TAS market profiles are concerned, that identify support and resistance, and again, I'm not looking at intraday type stuff. I'm trying to say, hey, has coffee turned from an intermediate or longer term standpoint out here? As we take a look at these charts, the answer is no. What else is it that you and I know about coffee out here? And that is the following, that this has a falling price oscillator below zero. We know that because of Stevie's red/green line out there. And we saw that that turned red, the price oscillator got to zero on June 13th. And then you had that normal type of a test of Stevie's red line. That took place on June 26th. And for a day or two, looked like there was a glimmer of hope that was going to give you the bullish message with price closing back above it, because it really needed to do that and stay above that. And that did not occur, as we see on June 28th. So now what we have is as we speak right now, 1:45 in the afternoon, you have price trading below daily and weekly profiles and below Stevie's red line, which is priced at 106.76. I don't see anything bullish about this chart right now when I take a look at the September contract. Now, just for the heck of it, I don't know if profiles are going to change or not. Sometimes they do, sometimes they don't. But we'll go take a look at the, well, we'll just do it like this here. Let me just change this over. KC. Hey, just for the heck of it, let's go take a look at the December contract. I believe that was another one that you were looking at. Let's go see what their profiles are showing. So you can see their profiles here on a weekly basis. You know, it's all the way up at 130.15. So using our TAS profiles and looking at the December contract, to me, it's just basically, it's meaningless. And I never want to provide meaningless information out here. But the daily, although it's a different bottom of its box out there, even looking at December, below that level as well. So that doesn't look, I don't know if the profiles will change if we go over to September out here, but let's just go ahead and finish this off since there are no questions in the loop out here. Again, I don't remember the numbers, but you're looking at them 106.74 in the daily and 108.75 on the weekly. So I'm not seeing anything good here. Yes, I see the counter trend rally on an hourly chart out there, but even if we take this chart here, we can change this to the hourly. You're just going to have to give me one moment, please, while I change Stevie's red line, because right now you're not going to see it, but you will see it in a moment. I just have to change the time frames because it was set to a daily time frame, and now we're going to get the 60-minute chart, and we'll see where price is moving here, see what we can see, and I'm just not seeing a whole lot. What are we seeing out here? I mean, the A to B equals CD pattern in this chart does not look like it is completed to me. This is what I see when I look at a 60-minute A to B equals CD pattern. And that is that price wants to trade down to the 102.85 area. So if I do that, if I do wave counts to the downside, even on a 60-minute, you get to wave number 6. That's it. So I say you got to be careful. That's what I see when I look at coffee on utilizing really 3 different symbols out there, the synthetic version, and then looking at the September and the December contract. So I hope that helps you with regard to your trade. There was a question that came in from our polar bear asking me if I had the data on the VIX rate of change when you had a back-to-back one-day rates of change greater than 10%. And I used to have the actual spread, not the spreadsheet so much as the actual chart that had all of that. And lo and behold, a while back, a few weeks ago, it could be 3 weeks ago by now, a number of my charts got corrupted. Yeah, I do have backups, but then I got to go up to the cloud, go find them and figure it out. I've been able to get by without having to go through that hassle. Everything that's backed up is really for cataclysmic, for me, type of stuff. And so I'm just looking to see, do I back-to-back above 10, below 10? VIX rate of change, back-to-back above 10, below 10. So I've got 2 of them out here. Let's see if this one actually opens up. July. Well, this one does open up. But this one is the back-to-back where I've got the greater than and then the less than. So this one didn't get corrupted. And that's not the situation that we are dealing with. Let me try one more, see if this one opens. I'm not going to waste your time, but there was a question, and it would be nice if I actually could show you the chart, because I know I did the work, and I hate redoing the work out here. So one-day rates of change back to, no, this is going to be back above and below, too. So as far as how I would trade it without even having to go there and show you, I can tell you that my answer is going to be relatively simple. And that is that as long as to anticipate a bounce in the next trading session, anticipate a bounce. That's the minimum that I look for when you see that one-day rate of change. At least a bounce. You're looking at the equity futures contract. So the real benefit of that is if you're trading equity futures on a intraday basis, take as an example out here Sunday night. Sunday night, the market opens lower. Here's the ES mini. You know, and to get the bounce that we saw back that began at about midnight last night, and take a look at some short-term Rhodes momentum indicator signals, was everything you needed to know that there was a bounce that was going on. The question was, hey, where was that bounce going to take us to? You know, there's nothing like the daily Stevie oscillator on change level. Bottom of the TAS profile, the synthetic contract, those are good levels. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So as we were going to that break there, the question that was presented to me by David White was, hey, when you get a back-to-back one-day rate of change greater than 10%, which we don't know whether we are or we aren't, and whether we do or we don't today is not going to change what my outcome is, what I'm looking for, because the pattern that I do know, other than if we do get it to anticipate a bounce again, but what I do know is that the pattern that is associated with the New York Stock Exchange making higher highs, while the advanced decline line is making lower lows. And then once the spot volatility index closes over the 50-day exponential moving averages, that's the mixture. That's the mixture of what it is we're looking at, and that is what we have right now. That typically what you see is the New York Stock Exchange as a barometer continues to move lower until that advanced decline oscillator reading gets down to the minus 250 area. Now, normally I look at the minus 150 level as a place of make it or break it when the market is going to bounce. But that's not the case when we have this set of patterns out here. So if the spot volatility index closes above the 50-day today, 1328, I believe, is the number, regardless of what the one-day rate of change is, Futures traders can anticipate a bounce and decide how they want to manage through that. Equity traders that are in this for more of a swing type trade out here, really what you're going to look at, and you're only at minus 114 right now, and you can see where the minus 250 level is, and you can take a look at those green diagonal lines on my screen in panels 1 and 2 out there, and that says what we're going to do and anticipate is wait till that oversold reading inside the New York Stock Exchange advanced decline oscillator reading gets down to the minus 250 level. That is probably where the next bottom will come in, and there will be a next bottom in the market. What you can see by the way that other commodities are moving, by the way that other markets are moving, there is one place that money is flowing. One place. And it's a big place. And it's a beautiful place out there. It is called the U.S. stock indices out here. So all this stuff that I'm talking about, or anybody else, markets pulling back, as far as your long-term accounts go, don't touch them. Find ways to add to them. This rally has a long way to go, and for a long period of time. Steve Rhodes with TFNN. Thanks so much for being here. Stay tuned. Your favorite polar bear, David White. He's up next. Tom O'Brien, 3 to 5. I'll be back with you on Terrific Tuesday. Have a great day, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.